morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday, end of the month for trading, and we have a USDA report. Right now, we have beans up 4 cents at 11.56. Corn also up 4 cents at 4.17. Chicago wheat's down 2 cents at 5.57. Outside market stocks are higher. The dollar's working lower. Crude's higher. And gold a little bit higher. USDA, the numbers are pretty much in prices with stocks of corn, beans, and wheat as of June 1 higher than a year ago. And then we'll see how the acreage mix is. But I think the big thing right now is that we'll probably see higher prevent plant acres in the northwest part of the Midwest where we're seeing some flooding. Again, when we look at overall crop conditions, for corn and beans are about 20% better than a year ago, and it's hard to rule out the chance of a 180 corn yield and a 52 bushel bean yield, which would add to next year's carryout. When we saw the export sales data yesterday, wheat was better than expected, and wheat rallied on that news. I don't know if we can say that wheat has made a bottom. But U.S. harvest is more than 50% done, which tendency has a little bit of a bounce post-harvest. This Black Sea harvest, though, is just beginning for winter crops, which could offer some pressure in the market. In the wheat, we did see Egypt come in and buy wheat. Saudi Arabia is tendering for wheat, so some people think that we might be seeing the bottom in export prices if consumers come back and start buying. There were 1125 Chicago wheat deliveries, and right now you've got the July SEP spread in wheat out to about 7 to 8 cents on a carry. Over in the corn market, again, sales were a little bit disappointing. I think that offered some resistance to the corn market, and I think that we'll be watching to see just what our final demand numbers are relative to supply. Again, the corn stocks are supposed to be bigger than last year, and we'll see if acres are moving higher, but we could see higher prevent plant acres in the corn. The deliveries were 744 in the corn, and we're at some multi-month lows in the corn futures market. Ethanol plants are reaching for corn, but there are a few in the Northwest that have some logistic problems because of the flooding. So I think the corn market, in order for it to kind of recover from the fact that funds are short almost 260,000 contracts, we need to see some kind of U.S. weather problem or a pickup in export sales. In the bean market, again, Brazil soybean prices are cheaper than U.S. The Argentina crop is as big as the USDA is expecting with harvest done. The oilseed workers are calling for a strike. We did see that the demand for meal from an export side was okay, but talk about U.S. meat producers bringing meal in from Argentina offered with some resistance. Dalian, soybean meal, and veg oil prices were all higher. So we'll see what the USDA has to say today.